Hey guys, welcome back to the FIRL, your wormhole from TradFi to DeFi. And it has been a really challenging week, a really painful week in DeFi. And today we're going to cover all that has went down, that has led to the recent Terra crash, and kind of like also the aftermaths after the crash as well. I also want to remind everyone that whatever we say in this video, in all the videos that we are going to make, all the videos that we have made, has never ever been intended to be financial advice, of course. So to start off, right, I think one of the best ways to really illustrate what exactly happens is for people who aren't familiar. We actually did a longer video before. We can actually link it up to the top right corner on how Terra Luna works. But a TLDR on how it works is essentially Luna and UST have a very reflexive relationship. So in order to mint UST, one UST for example, you need to burn one USD worth of Luna to mint UST. So for example, if Luna is $10, you burn that Luna in the market module within their own blockchain, you get 10 UST. Now the intention is for UST to be $1, right? It's supposed to be pegged to $1 stable coin. So if UST depegs to 50 cents, for example, you can now buy 10 UST for $5.
Yep.
And with that 10 USD, you can now buy one Luna, which is worth like $1. Sorry, which is worth $10. So that opportunity allows you to buy Luna cheaper. And by doing that, by buying up UST, you essentially get to bring the peg back to $1.
Yep.
Okay? There's a longer video that we can explain, we can use to explain how exactly it works for you. And this is important because it is also what has caused the potential, or not, the eventual downfall of Terra Luna. Yep. I'm going to go through a little bit on what exactly happened that has caused Luna to the UST to depeg, and then everything to crumble, right? We're going to explain a bit about Curve. So MJ and I, we talked about this a few times before, right, in previous videos, that Curve is essentially the backbone of DeFi. Now, when you look at Curve, right, it's actually really boring, right?
Yeah, it's
basically swapping stable coins. It's like I have USDT, you have USDC, we swap among each other.
Yeah.
To ensure that works, they need to have really, really deep liquidity. By that, I mean they need to have a lot of USDC and USDT available on the pool. Because in DeFi, how things work is everything exists on the liquidity pool, and you got to make sure that it's kind of balanced so that one price doesn't go beyond one. What UST, what Terraform Labs, what LFG, Luna Foundation Guard, they wanted to do was they wanted to move their UST, right, from an existing biggest pool of 3 pool into a new 4 pool. When they did that, they took UST out of the 3 pool, which really made the UST very little in the 3 pool itself, right?
For that moment.
Correct. For that moment, for that short moment, to prepare for 4 pool. When they did that, I think within 15 minutes, a alleged attacker suddenly deposit about, I think, 300 million worth of UST into that pool. And then when they did that, right, they immediately sold that to buy USDT, DAI, and USDC. Now, if you look at just an imaginary scale, for example, right, let's say you have 2 assets. Let's say you have everything like USDT, USDC, and DAI in one end, and you have UST. If it's the same amount, it'll be quite balanced. When this fella suddenly dumped in so much UST, right, and he used that UST to buy up USDC, there's a lot more UST in the pool, bringing the weight down, and then it's much lesser DAI, USDT, and USDC.
Yeah.
When there's so much of the supply of UST, right, the price actually drops, goes below $1 because there's so much supply now. Yep. Naturally, price becomes cheaper. And what happens when the stablecoin depegs?
Some sort of fear starts to happen.
Yeah, I think exactly a week, 10 days ago, that's when it happened, essentially. UST depegged to about, I think, 99.3 cents, if I'm not mistaken. And in the world of stablecoins, right, that is a huge deal because if your dollar suddenly loses 0.07%, it is mayhem. When this happened, the LFG, the Luna Foundation Guard, which was created by Do Kwon and his bunch of friends, right? Well, not just friends, right? Highly reputable VCs. They tried to defend the peg by selling Bitcoin to UST and then taking UST off the market. When this happened, right, the whole Bitcoin market was also shook because when you have a whale selling Bitcoin in that amount, that big amount, right, there's going to be market volatility. And when Bitcoin is volatile, right, usually what happens is every other alts get decimated as well. They move up 10%, they move down 20% easily. And that includes also Luna, which is, as you mentioned earlier, is used to mint UST as well. The defense didn't go through. I think they only had about like few billion to defend. I think the attack was way more than that. The amount of people selling UST was way more than 3 billion. And that further caused UST to depack to 70 cents, 50 cents, 40 cents, 30 cents, and today it's about 10 cents. The things that we discussed today, by the way, on the 19th of May is still unraveling. So things are very fluid. When this video is posted, there may be a lot of things that may have happened, but we're just covering what has happened so far.
Yeah.
Now, I think, MJ, you want to talk about some of the aftermath?
Yeah. So anyway, if you go back earlier in this video, you will realize that the way, what this is called, what Luna is called, is an algorithmic stable coin, right? And the risk of algorithmic stable coins have already been highlighted by a lot of academics and a lot of people. And in fact, there are already areas of risk, or rather real life case studies that have actually caused this sort of issues. Now, one of the most famous ones is Iron Finance, right?
Yep.
That you guys can go and Google and study. And so a lot of people were likening Terra with Iron Finance. Why this is a very unique case study is not because of it's not like a pure repeat of an algorithmic stablecoin issue. Because the people who are building on Terra, if you follow Terra closely, and I don't mean the memes and the Luna to 1000 kind of stuff. I mean like the serious stuff. People were hyper aware of the issues that Terra was facing, and they wanted to create something that would prevent this sort of death spiral from happening. So one of the things that they did was to ensure that Luna itself was a very vibrant L1, because at the end of the day, the value of the stable coin is based on the value that is being generated, or rather what is backing the stable coin. So in previous cases of algorithmic stable coins, you never had the kind of vibrancy that Luna had as a governance token. So that was why during the previous May 2021, there was also a depack for USD, which was
85 cents
to 85 or 82, I can't remember, somewhere there. So it bounced back, right? It repacked. And in fact, the market conditions are very similar. Some will argue it's actually even worse than today what's happening. Although I think at the rate, it will probably equal and probably be as bad. So why did it repack 1 year ago, when actually the Luna community was a lot smaller, and in terms of the kind of activity that's happening, whether it's active wallets or developers in the ecosystem, it was a lot smaller, a lot weaker, and yet it repacked. So what actually happened this round? Well, we can go into a lot of things. I would say the two big ones is, ironically, the effort to diversify away from being a purely algorithmic stablecoin was the cause, or at least the trigger of the downfall, which is to over-collateralize, or at least collateralize in part.
Yeah, partially by Bitcoin.
Yeah, which is the big irony, right? So that's why this is not a simple, well, you should have just avoided algorithmic stable coins, because when you look into the details, you realize that actually what caused it was not the algorithmic stable coin. In fact, today, all the underlying mechanisms are actually still working. So that's the first thing. I think the second thing is that unlike the previous May crash, Luna and UST now is being traded in the hands of a lot of people who are more retail in nature, meaning they don't fully understand Luna and all that. And so that actually fits into the reflexivity or the psychology of Luna. So just to give a concrete example, 1 year ago, UST and Luna was, maybe Luna, yes, but UST wasn't listed in areas like Binance, KuCoin, and Huobi and all that.
Yeah.
And so
It's
largely it was a container, right? Essentially Anchor or Luna. But with the exposure to centralized exchanges, it means that there's a lot more exposure to, for the lack of for a better word, normies. And so the psychological makeup of Luna token holders and UST holders become very different.
Yeah.
So that's why when it depacked by 15 cents 1 year ago, the kind of people that were holding Luna and UST, they weren't worried because they know the arbitrage mechanism will eventually solve it. So the psychological impact wasn't as big. This round, a lot of people, and in part thanks again to the Lunatics community, because I mean, we have to take blame for this because we were the one pushing for USD adoption aggressively. We were the one saying that, we need to onboard normies and things like that. And so as we did that, we didn't realize the psychological fortitude or the quality of the psychology of the average Luna or UST investor has dropped. Yes. And so when you get the trigger of the BTC sell-off, and by the way, this is happening during a bear market. If it wasn't a bear market, I believe this would be in a different situation. Or if they migrated into 4 pool a lot quicker, this wouldn't be as devastating, at least based on certain calculations. So that triggered off a lot of these events, and then you add the fact that the psychological frailty of just crypto in general has increased as a result of more people coming in.
Bearish macro sentiments as well.
Yeah, so it's a very complicated thing. It's not as simple as, well, you see, Anchor is a Ponzi. People say, well, Anchor is Ponzi. Okay, so what? So my question is, okay, what Ponzi tells you, right? Hey guys, the returns are about to lower. We intend to lower the returns for Anchor over time. I don't know. I've not heard of a Ponzi that is like that, right? But yeah, anyway, yeah.
I mean, it's easy to label something as a Ponzi, as a scam. I mean, in hindsight, right? I mean, we, of course, in our previous videos, you probably know that we are big fans of Luna, and we take full responsibility, and we are now on path to understand what has happened, to make ourselves better investors, capital allocators, and hopefully to impart that knowledge on you as well. But yeah, I mean, to your point, yes, they bought Bitcoin at 40 over K, and they had been forced to sell it at 30 over K. That's not great to defend the pack. Also, that's just everything we mentioned, right? But let's talk about the aftermath. We'll paste the price chart of Luna and UST here, so you can have a check of what happened exactly. And I think the prevailing narrative right now, right, is preserving the dApps, the team. I think if you use the Terra ecosystem, I can argue that it's one of the best user interface that I've used as a DeFi user. And the ecosystem is very passionate, albeit a little bit cultish, of course, So that is the big narrative right now. And that is why one of the latest proposals that came out, right, was to fork the current chain. And we talked about fork before, but just a TLDR, right? Fork basically means that everything in the chain will remain the same, but it will just kind of go 2 different ways. The new chain will have a new token called Luna, whereas the old chain, the Luna that we used to hold in the previous chain, is going to be called Luna Classic. Ticker symbol LUNC. And will basically be like the old Terra chain that has been defunct. But the difference is this time that chain would not have UST. So it's going to be like Solana, like Ethereum, like any other L1 without the added use of, having the beauty of a stablecoin existing there. We'll paste the link to the proposal down below, but let me just read to you guys a little bit about how they're planning to give airdrops to previous holders. So there will be 25% of the new Luna token in community pool. So that will be for governance, for developers who want to build on the new chain. For pre-attack Luna holders, so they have a definition of pre-attack being block 7544910 at 7th of May, before I think the pack got destroyed, right? You and I, essentially, we're going to get 35% of the new token. And this is excluding what TFL had. So the TFL wallet, which I assume has millions of Luna, right? They will be excluded from this, hence making the new Luna token fully community owned, essentially. 35% is for those people. And then there's pre-attack AUSD holders, only 10%. So I think this is where the contentious part is, right? Like AUSD holders are the ones that, first of all, you consist of a lot of retail participants as well. A lot of people are just putting money in because they had the promise of being paid a stable 19.5%. A lot of people say that if you want to make anyone whole or prioritize anyone, it should be this. So nonetheless, I think this proposal is still going to go through. AUSD holders are going to get 10% of the new Luna token. And interestingly, right, even post-attack Luna holders, those people that bought Luna at 0.001 or 0.000, how many zeros there is, right? They're going to get 10%. Similarly, post-attack USD holders are going to get 20%. Post-attack is defined by after snapshot will be taken on the 27th, in fact. So in fact, if you, again, not financial advice, if you buy Luna and buy USD right now, you held it in your Terra Station wallet until 27th of May, you are eligible to receive 10% as a Luna holder, 20% as a USD holder of the new token. So that is the TLDR of the proposal. Link in the description below. I suppose now let's talk a little bit about some of the reasons why it failed, right? Essentially, MJ, you want to start first?
It's very hard to say because we need to ascertain the nature of the quote-unquote attack, whether it is indeed an attack. But suppose that it is, like many people in the community are suggesting, I think a large part of it is the invitation of being attacked by Do Kwon's attitude with regards to how he deals with Twitter. The ideal leader to have in anything, right, whether or not it's a blockchain company or a Luna Foundation guard or a normal mom and pop's shop, is that you want the leader to shut up and build, right? You want someone who's actively improving the fundamentals of the token, but at the same time, he's just quiet about it. He's not talking about it. I think the issue with LFG and Do Kwon is that they were building, but they didn't shut up about it. And so when you don't shut up about it, when you do not display humility, then you are just inviting attackers. Now, someone might rebut and say, well, just because you do that, success always produce haters, which I agree. But why add on to this, right? I mean, building a chain is already a big challenge, right? But that said, how do I put it? Let's say if it wasn't attacked, it was just purely someone. Like if I had to guess, the guy who attacked, so to speak, Luna, he probably just wanted a nice gain on his short side, right? If I had to guess, I don't think he intended to crash everything. In fact, I might have a sneaking feeling maybe he staked some Lunas as well of his own, right? Maybe because he stakes there's a 21 unstaking period. So maybe he just want to make a quick buck during a downturn, right? So we don't know. It's pure speculation. But I think one thing for all of us to learn is to not delve and go into this sort of conspiracy theory mode of, well, could it be the government? Is it Citadel, BlackRock? I mean, it gives you no value to even if it was true, so what, right? So the thing about algorithmic stablecoin now is that the standards need to be higher. I still believe that we need some form of stablecoin market, because without stablecoin markets, right, just like any other financial system, if you do not have a stable asset to use as some form of currency, you're not going to do it. That's why Bitcoin won't cut it, Ethereum won't cut it, any other tokens won't cut it, because these are volatile assets. So I don't think the market is going away, but now if you're creating a stable coin, I do believe that it needs to be a mixture of, thus far, the three methods of securing a stable coin. The first is algorithmic. The second is backed by some sort of perceived to be safe asset in the crypto world, such as Bitcoin, maybe Ethereum. So we would talk about guys like DAI and all that. And the last bit is, and this might be controversial, is that actually there needs to be some fiat backing it as well, because we are interacting with the fiat world, and in order for stablecoin acceptance to be gained, we need to be connected to the fiat world, and therefore the way we secure the stablecoin would need to probably include fiat. And look, as much as people who are in the algo stablecoin camp or the decentralized economy in this decentralized currency camp, as much as they have disdain for like USDT, let's be honest and look at the facts, right? USDT also had a small depack during this crash, and yet it has recovered. Now, again, it might depack in the future, but thus far, as of this recording, it has shown itself to maintain the pack, right, quite decently. Yes, there's the risk of all the regulators clamping down and things like that. But the fact of the matter is, I think it's a coming of age moment for crypto holders. We need to be able to say, let's take all different methods, right? So yes, we can have the algo stablecoin element. Then if you're going to get certain assets, crypto assets to back it, okay, do we get Bitcoin? Well, look at what happened during a bear market, right? So people creating stablecoins now have to think, okay, sure, we can get in a bull market, that's not going to be a problem, but how do we withstand the issues in a bear market? And of course, last to include fiat. So that's what I think it failed. It was, many of these things. And don't forget, there are also unforeseen circumstances, right? Like, Bitcoin was bought to defend the peg. It actually made the peg worse, right? How many people were actually talking about it? I'm sure in some corner, someone was mentioning about it, but by and large, even very smart people looking at this didn't really catch it. So,
yeah. I mean, I also want to just point out, right, that the attacker shorted, I think he shorted Bitcoin. How it worked was the fact that he took out a 300 million, okay, I can't exactly remember the number, right, but he took out a loan in Bitcoin. He sold that Bitcoin. So essentially, you're shorting Bitcoin by selling it at that point, right? And then he used the amount of money that he got through that sale and he bought USD, and that's how I keep saying he, right? He might be a she, who knows? Dumped it into the curve pool, and that's how it happened. Now, I think one thing that we might not be sure is the intention of this attacker. Was it malicious? Or was it intended? Or did he, because he saw that the curve pool, the 3 curve pool plus USD is now much lesser in USD liquidity, he got spooked, and then he just put money into it and then just sell his USD. There's so many factors, and I think, as you mentioned, there's no point in discerning what
the intentions
of the person.
It's impossible. And you're wasting time also.
Yeah. And I think this is, again, as you mentioned, stablecoin market is a huge market. I think algorithmic stablecoin is like the holy grail of being able to, well, in a sense, just print money at will, right? I think people are still going to attempt it. It's still going to be experimented. It's still going to be tried out. I think, in fact, Frax is like one of the premier ones out there right now, right? But of course, whatever it is, this has been a painful lesson for myself, for a lot of us in the studio here right now. And it's something we want to learn from. And one of the biggest lessons that I've learned is I must rethink my concentration. Even if it's in a stable coin, having primarily just a stable coin in one ecosystem, aka USD, is a recipe for disaster, right? And of course, one thing that I also want to mention is I shall not outsource my due diligence to anyone.
Yeah.
You have big VCs backing Luna, right? You have Jump, you have Three Arrows Capital, the famous Suzu, you have Delphi Digital, all backing Luna or wanting it to succeed. But of course, just because they are venture capitalists, just because they are big funds, doesn't mean that they are guaranteed to hit a home run. That's all I want to say. MJ, I think that was
I think one thing to add on the psychological front is that you want to make sure that, or at least I wouldn't say top signal, but certainly something you want to associate yourself less with is if you bring up certain criticisms of any token, and the response by not merely just the small back holders, but certainly the big back holders, the people who are heavily invested in that token, comes out and respond to your criticism in a way that is demeaning, in a way that is vicious and very
being a maxi, essentially.
I think you can still be
Toxic
a maxi and polite, but if you are a maxi and you just defend, like it becomes a religion, right? That's when it becomes an issue. That was happening with the Lunatics community because there was a lot of people bringing up FUD on fear, uncertainty, and doubt on Anchor. And now I do understand that I disagree with a lot of the analysis out there that Anchor is the cause of all this. No, as you can clearly see, that isn't the issue. But when Anchor was being criticized, a lot of people came out and just started saying that these people who are criticizing Anchor are just taking advantage because it's doing a bear market. So they want to just pile on pressure of Luna, and these people have bad intentions, they don't understand, and things like that. When in fact, a lot of the criticisms of Luna were valid, right? I disagree with them, and to a certain extent, I still disagree with them today. But by and large, it's about the attitude of the community, and it didn't help when the leader of the token, Do Kwon, was behaving like that, right? Where he was saying things like it's being wrong is not a bad option, or like you are poor, or like go around betting 22 million that Luna will be 80 in next year. Like just insulting people and things like that, right?
And you had the community backing him to do it. The community was equally toxic in that they were saying that this is acceptable behavior.
Then when the response to let's say a thread criticizing Anchor is NGMI, right? That's not how discourse should take place. So these are some of the psychological like pointers in the future. I guess proudly say that even though our Luna backs was big, we always were accepting, I think, of people criticizing Luna and saying that it wasn't the best, right? We have no issues with people not holding Luna and holding other things, thinking that other things can go up and do better. We don't think that we have all the knowledge in the world to say that this is the best investment. This is just the best investment we know based on what we have, what information we have. But
of course, we did wrong, nonetheless. If any closing thoughts, I want to say that a reminder to myself, a reminder to everyone that crypto is a very volatile asset class, obviously. It is still an experiment, and Terra Luna, as much as we've seen a successful price action, successful growth in user base, developers and all that, was still an experiment. And if you ever decide to get into crypto, invest in crypto, right, know that it is all an experiment that, it may go up 5-10x, or it may go to zero. And I think this is what makes crypto an enticing investment for us. The upside is huge, but the downside is also that it goes to zero, right? So
I don't leverage actually, because if you leverage, I just want to add, right, you make the downside infinite, or more infinite, I would say. Whereas if you don't leverage, you know what your downside is, which is the capital you put in.
Correct. With that, thank you guys for watching today's video. And again, know that this is not financial advice, and we'll see you in the next one.
Bye-bye.